IPOs have been in short supply in the UK in recent years, but 2021 is set for an avalanche of new listings on the London Stock Exchange. Talked about as the IPO rush, new entrants in 2021 have so far included online greetings card retailer Moonpig and the big boot champion Dr Martens, both of whose share prices are up significantly from their launch dates in January.
And with many more companies set to follow them onto the FTSE, is 2021 the year of the IPO? With asset prices continuing to soar, are these new entrants an almost guaranteed easy win? In this episode, we'll answer these questions, plus we'll look at the big upcoming IPOs and the impact for the FTSE.
And we'll look at some alternatives to buying on the IPO date if you want some skin in the game on new listings like Deliveroo and Brewdog, without having to commit to the price that some investment bankers have set. Let's check it out.
Welcome to moneyandshackled.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
Moonpig and Dr Martens and probably all of the upcoming new stocks are available to buy after their IPOs on investing app Freetrade, who will give you a free share worth up to £200 when you top up a new account with £1. This offer is on the Money and Shackled offers page, linked in the description below.
Quick recap. What is an IPO? An initial public offering, IPO, makes a company's stock available for retail investors to buy. It changes a company from being privately owned, like Elon Musk's SpaceX, to publicly owned, like Tesla.
The company will decide how many shares it wants to offer, and an investment bank will suggest an initial price for the shares based on the predicted demand for them. Companies want to go public for different reasons. Most are looking to raise money to fund expansion. Others may just want to appear on a stock exchange to be seen alongside the big brands and boost their public profile.
2021 IPOs. To buy a stock at the IPO price, you can usually register an interest through their websites, or buy through a good investment broker like Hargreaves Lansdown or Interactive Investor. This is known as the primary market. When an IPO is over, the company joins the secondary market, e.g. the London Stock Exchange.
Once they joined the stock exchange, Moonpig and Dr Martens became available on your favourite trading apps to buy and sell as you would any other stock.
By the time they'd hit the exchange, both these companies had closed their day one around 20% above the IPO price. But as you can see, both have continued to rise since joining the open market.
About to land are IPOs for craft beer producer Brewdog, technology embracing delivery service Deliveroo, fintech innovator TransferWise, cyber defence geeks Darktrace, pensions provider PensionBee, and that beacon of truth Trustpilot. Should you get in there now while you can, before these are floated as well?
Darktrace, TransferWise, PensionBee, Trustpilot and Deliveroo are due to launch later in the year. Keep an eye on the finance news so you don't miss out when the IPO dates are announced.
A strange new world. We're currently in an investing environment where all assets are massively up and rising despite the economy tanking. We're in a world where retail investor sentiment on Reddit can drive stock prices through the roof regardless of their fundamentals.
A world where Bitcoin is up around 10 times from March lows in 2020, despite its practical use as a currency being no further advanced than it was a year ago. And where big US stocks like Tesla, now valued higher than Toyota despite only having 3% of their market share, have been associated with the word bubble now for the last couple of years.
Set against this backdrop of wider market momentum, recent IPOs have been doing well for the most part.
But there's a risk that the recent success stories of IPOs and stocks in general leads new investors to assume that these new launches represent free money served up on a plate. If we look back at the history of IPOs, which we will do shortly, the story is quite different. That said, the offerings in 2021 are for some very exciting companies. Let's take a look at some of them.
Deliveroo. The Deliveroo float will be the UK's biggest in years at an expected £5 billion. Unfairly, this is only available to institutional investors, and the likes of us will have to wait until the stock hits the exchange before we can buy in.
Keep this one on your watch list though, because the initial price on the exchange could go either way from the IPO price. You could just as easily get a better price than the bankers who got in there first. The Amazon-backed food delivery app is hoping to follow the lead of US counterpart DoorDash, which soared in value after its own market debut in December 2020.
Deliveroo works with more than 140,000 restaurants globally. It's also tapping into significant growth potential of online grocery deliveries, partnering with supermarket chains. The lockdowns have transformed its fortunes, given that people have little choice now but to order takeaways. What else are they supposed to do? Cook.
The most recent results for 2019 showed that revenues were 62% higher than the previous year, and in December 2020, they came out and said that they've been profitable for the last 6 months, after years of being loss-making. It's definitely one I'll be keeping an eye on.
Trustpilot. Trustpilot has the potential to achieve unicorn status. Startups valued at over $1 billion, with its IPO expected to take place in the first quarter of 2021. The customer feedback platform has a strong presence in the UK, US and Europe, racking up 100 million reviews so far for more than 400,000 companies.
It's the first place we look when trying out a new company's services. They make money primarily from clients paying to showcase Trustpilot ratings on their websites and to use their review management tools.
Trustpilot reported $82 million in revenue in 2019, up 27% on 2018, but remained loss-making. However, usage of Trustpilot has grown even more this year as people turn to its online reviews during the spike in e-commerce driven by the lockdowns.
Lessons from the past. No IPO is a sure thing. Recently launched stock Aston Martin is down over 80% in 29 months. And if we look at some statistics for IPO successes in the past, the data is sobering.
The news is not so good for long-term investors. Most IPOs lose money for investors after 5 years. More than 60% of over 7,000 IPOs from 1975 to 2011 had negative absolute returns after 5 years in the secondary market. But short-term traders may fare better. Early returns on the launch date have historically been good. From 1980 to 2016, the average 6-month return for IPOs is about 6% versus an 18% average gain on the first day.
Toss of a coin. Why long-term investors should probably avoid the IPO price. To know that you're getting a good price on the IPO date, an investor will need to be able to confidently value a company for which there is limited publicly available information. Stock analysis tools like Stockopedia can't help you with a stock that's not yet listed.
The problem with the IPO price is that you don't really know if it's a fair price or not until it's been tested by the market. The price the investment bankers came up with for the IPO launch is largely irrelevant after the curtains are opened.
We showed that historical IPOs were priced too highly around 60% of the time. Unless you're a sophisticated stock picker who can analyse stocks better than the investment banks who run the IPOs, it's not that far away from a toss of a coin.
Alternative to buying at IPO. If you're really interested in buying one of these great British companies, why not wait until a few months after the IPO date to see what the real price is once the dust has settled? You may prefer the gamble of the quick win on IPO date, but we prefer to deal with all the facts and invest for the long term in quality companies that are fairly priced.
You may remember peer-to-peer investing app Funding Circle. Since the fintech company IPO'd in 2018, the share price did nothing but plummet for the next 2 years. If you were interested in this stock back in 2018, having the patience to wait a year or so to see the aftermath of the IPO would have paid off.
Now that the pandemic looks to be drawing to some kind of close, the reopening of businesses should bring back demand to the peer-to-peer lending sector. This could be an example of buying a stock that you like the look of at the opportune time, rather than at the launch date dictated by the company.
Signal of strength in the UK. One thing we Brits should take heart from with 2021's IPOs is that they are a much needed injection of life into our stagnant and lumbering stock market. The FTSE is packed with old school financials, energy companies and retail stocks of the dying high street variety.
What this country desperately needs is an inflow of fresh multi-billion pound tech stocks being floated, and that's exactly what we're going to be getting with this year's new intake.
Moonpig and Deliveroo are online tech stocks with a real-world physical presence. TransferWise and PensionBee are fintech companies. Darktrace is in cyber defense, and Trustpilot deals purely in data. The inevitable result of the FTSE slowdown has been a flood of money leaving London to find better returns elsewhere.
In the past 5 years, more than £30 billion has been pulled from UK investment funds, and the allocation to UK companies in global funds has halved. Of the 10 most popular funds purchased last year by customers of Hargreaves Lansdown, not a single one was UK focused. Hopefully, London IPOs in 2021 go some way towards correcting this trend.
Question of the day. What do you think of the IPO market this year? Will you be buying any? Join the conversation in the comments below.
Thanks for watching. On this channel, we talk a lot about personal finance, investing, and all things money. If you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.